Alright, now we move on to our next topic, which is auditing the purchases and payment cycle. Alright, so this is our outline. Now, number one, we have to understand the internal control structure in the purchase and payment. Alright, number two, the preliminary assessment or control risk that you should have. Alright, the assessment. Alright, we have to assess the control risk, and then we have to test for the control, and then we have to see the preliminary assessment of control risk, and lastly is a substantive testing. Alright, for the purchase and payment cycle, if you can see that if we bought materials, fixed asset, or anything that we purchase on credit, so we should be debit all this account and we should credit with our creditors. Alright, so if we make payment by the bank, so we can credit bank, debit our creditors. So same also if there is a purchase return or a purchase discount, the double entry with the creditors account. Alright, so next one, we would like to see the flow chart of the purchases and payment cycle. Alright, from the flow chart, we can see that the purchase requisition, it means that we request for the purchase, alright? So if we request the request for the purchase, some sort like come from the store department and so on. So this purchase requisition should send to the purchasing department. So the purchasing department, they would like to prepare 4 copies, alright? The original copy will send to the vendor. Alright, the second copy will be filed according to vendor or date. So it depends on whether alphabet or by the date of purchase. Alright, copy 3 and copy 4. So copy 3 is here and copy 4 is here. Copy 3 was sent to the receiving department. Alright, the purchase order often with the quantity, omitted. Why? Because they don't want to know what is exactly the amount that they ordered. Alright, so what they have to do is compare description of the good received with the purchase order. Alright, and then what they have to prepare is the receiving report. So the receiving report, 2 copies here. Alright, the first copy is actually we are going to file by the department. The second copy was sent to the accounts payable department. Okay. So in the accounts payable department, they already have the purchase order, alright, the 4th copy, and then they have the receiving department for this one, and then they also have the supplier invoice. So the supplier invoice was sent by the supplier. So they have to match the 3 documents before make a payment. So the voucher packet checked by the clerk with control step performed. So make sure that they really purchase of this one, and then they would like to pay for the purchase that they made by the company. Alright, and then they enter into the voucher register. So they prepare check, and then also if there is allowances or disbursement, and then they update the check register. Alright, and the cash department here, we can see that the check with the supporting document, they will review and then sign the check. So once the check signed, so this one with together where supporting document need to be cancelled. So it means that cancel, it means that already paid. Normally they chop paid, and then this one will be filed in the department. Okay, so this is normally for a good system of the company. Alright, so this one is the documents related. So we have the purchase requisition just now. So what is purchase requisition? So employee requests to the purchasing department to make sure that purchasing department will purchase because they are out of stock. Alright, so what they have to do, prepare the purchase order. Purchase order is outside supplier. Request to the outside supplier or the supplier or the creditor to supply goods specific in a purchase order. Alright, so receiving report. So upon receipt, so showing the description, quantity received and the date received. Normally this receiving report, they will not state the amount received, so they have to check and then they are going to state the amount. All right, if the amount received is exactly the amount that we ordered, it's really good. If something is missing, they will know. All right, and then debit note. So what is a debit note? A memo authorizing purchases return for damaged good. It means that here, if something that you receive that not according to the spec, then you are returned back to the supplier. And then the supplier invoice. So billing by the vendor, giving description of goods, amount due, and the payment term. So this one is going to be issued by the supplier for the company to make sure that the company are going to pay for the service. Right, vendor statement is actually showing beginning balance, purchases, payment to vendor, and the ending balance. So it means that the full statement, which is stated by the vendor, amount at the beginning, how much they purchase, is there any return, and also the ending balance. Voucher is actually the summarizing details of the purchase transaction, which serve as a basis for recording and approval of payment. So this is document prepared by the company itself in order to make a proof of payment for a certain things. All right, voucher register is actually recording all the vouchers in the register. So it means that they document properly what are things that they already approval for the payment. So this is voucher register, the list of all the vouchers. Right, check register is recording all payment in this register, such as like cash payment journal has not been used, for example. Alright, creditors ledger, so posting all the purchases and cash payment transaction to individual account in the payable subsidiary ledger. Right, now we move on to the next one. So activity with purchases and payment cycle, request goods, alright, and then preparing purchase order, and then after we receive the good, we inspect and then store the goods, and the last one we make payment, and then we are recording. Okay, so what will be the next one? So this is the internal control objective and internal control procedure. So right, so we can see here for the occurrence to make sure that the things are occurred or exist. So recorded purchases represent the actual acquired. So it means that there is no fictitious purchase. So specific control procedures, what should they have is vouchers for payment of purchases should be supported by proper documentation. Like we can see just now, in order to make a payment for to the creditors, they should have a proper documentation, some sort like the purchase order, the receiving department, all the items are being authorized, alright, so they can make for the payment to make sure that the things are exist. Some sort like here we can see here, authorization approving of requisition, purchase order, okay, including price and terms, receipt of goods document, and review authorization and match vendor invoices and supporting documents. Vendor invoices and supporting documents to make sure that what the company pay is actually the amount is actually they order and is actually amount that they receive. Alright, for the completeness, to make sure that all the items are recorded, so what they have is actually the document should be pre-numbered. Pre-numbered, it means that it should be there is there is a numbering system. So in case of one document is missing, so the company still can trace where is the document, or is either is being misused by other parties or what. Alright, accuracy, how to see that the purchase is accurate. So what they can do is there should be procedures for independent verification, such as quantity received, prices, term, and this one. Alright, so make sure for the internal verification. Alright, internal verification, is there any verified on those price and so on. Okay, so next one, the cut off. Alright, so the cut off procedures at the end of the accounting period, for example 31st December. So this should be procedures for invoicing and recording sales as soon as transaction is effected. So year-end purchase cut-off should be independent review. So it means that at the end of the year it's quite difficult to us, because it's yearly at the year-end. So what they have to do is everything should be recorded and independently reviewed, especially at the end of the year. Alright, classification. So purchases are recorded in proper account. So it's some sort like purchase journal, GL, and then should be reviewed. And then the chart of account to so make sure that they have a proper classification. So for example, some sort like if they purchase for a fixed asset, is being recorded as a non-current asset or fixed asset, not as included as a purchasing, right? Or purchase for the goods, right? Alright, now we move on to the occurrence to make sure that all the items are occurred. So what are the specific control? So make sure that occurrence here is said the cash payment represent actually paid for the vendors. So there should be a separation of duties between handling cash and record keeping. So it means that here, if you would like to see two different job is doing by the two different person. Number one, the person who handling cash. Number two is for the record keeping. It should be two different person. And then pre-numbered check should be used and numerical sequence should be accounted for routine, including unissued check. So it means that everything should be pre-numbered. So if anything, we can see. Alright, cash are properly authorized. So make sure that someone who are going to authorize is actually being authorized before make a payment. Alright, completeness. How to see the completeness to make sure that all documents are pre-numbered, so we can see if any missing. Alright, accuracy and cut-off should be internal verification, comparing check payments for the payee, and amount and date, especially at the end of the period, accounting period. Classification, so cash payment are recorded in proper accounts, and then the account codes on vouchers should be reviewed. So this one we have to review the account also. Alright, now move on preliminary assessment of control rate. So it means that preliminary assessment is actually, we do this kind of assessment at the beginning. It's a preliminary. So after obtaining and the understanding of the internal control structure, number one, we have to understand first. And then what should the auditor do is make a preliminary assessment. So it means that here, the preliminary assessment, it means that at the beginning, what are the assessment that you have to do to make sure that to see the control risk for the financial report, assertions related to the cycle and the account balances. So after they understand, what you have to do is preliminary assessment at the beginning. Alright, the assessment is normally done through analysis of flowchart. Okay, so internal control questionnaires. Alright, so we can see that the assessment we can see from the ICQ and the flowchart. So we can see figure 14.3 from the textbook in the ICQ. Alright, now this is, for example, test of control. Alright, so this is test of control for purchase transaction. Alright, number one, what we have to do, select a sample of purchase order. We just take one of the purchase order, and then we inspect the evidence that have been approved and matched with the purchase requisition. So we just take one purchase order, then we see either that one is request or not being request, and then we see the invoice, vendor invoices. Is it the same figure, the same amount, the same spec that they charge, that they order and being charged by the supplier? Is it the same things that they receive? Is there any cancel upon payment? Alright, so number two, we have to review the client's accounting for the numerical sequence of purchase order. We can see the purchase order, receiving report and everything. We have to look at the pre-numbered numerical sequence. It means that is there any missing document and so on. Alright, number three, we have to select representative sample of file from receiving report. We just take any receiving report. Alright, then we have to vouch back. We vouch back to the purchase order and purchase requisition, retrieve back, and then vouch to vendor invoices. And then we examine supporting documents for evidence, for supervisory review and approval. Is there any authorization for the name? Alright, the rest I think that you read by your own. Alright, so this is continue. So I think that you have to read by your own. So what are the tests of control to see whether they are follow the procedures or not based on the flowchart before. Alright, so review of the preliminary assessment of control risk. So number one, for the purpose of test of control, purchase and payment. So in order to evaluate the effectiveness of the design and operation of the internal control policies, so enables the auditor to determine the assess level of control risk for the purchase and payment. So it means that here they have to do this one, test of control, to see whether the level of control risk. Okay, and then based on the test of control for the purchase and payment transaction, it will reveal such a deviation arise as a result of the control failure, and the auditor concludes that less reliant than the plan and maybe place specific internal controls, assess level of risk, and should be increased for the particular report. So it means that we have to test on the control. If test on the control is the control is good, it means that you can rely more on the internal control system. If the test it shows that it's not too good, so it means that you couldn't rely on the internal control system. So this is the procedures or techniques that can used by the auditor. Number one is inquiry, recalculate, observation, confirm, physical inspection, and then vouching, reperformance, analytical procedures. So these are the things that the procedures that can be used by the auditor. Alright, so this is the substantive test of audit program. Means that how the test should be done. Alright, select a sample of transaction from the cash payment journal, and then we vouch back to the supporting document, and then we take a receiving report, and then we vouch to the trace to the voucher register and cash payment journal. So this is the things that you have to do. Alright, next one, transactions related audit objective, key control, test of control, and substantive test of transaction for purchases. So transaction related to audit objectives, so key controls, then we have testing of control, and then substantive testing for the transaction. Alright, here I mean that I don't want to explain in all, but just give you the right the basic ideas. Alright, the objective of the transaction, number one, is actually for the existence. It means that recorded acquisitions for the goods and services received consistent with the best interest the client. So it means that they really exist for the transaction. The key internal control, acquisition approved, right? So make sure that everything is approved. Documents are cancelled to prevent their reuse. So it means that when the document is paid, so we have to stamp on the document, some sort like cross the document. See, we cross, we state like it's already paid, and so on. Alright, so we have to examine indication of the approval. Alright, examine indication of the cancellation if there is. Alright, so common substantive test of transaction. Alright, how to see here, examine underlying documents for reasonableness and authenticity. Alright, so here examine vendor master file for unusual vendors. So this one also for the unusual vendors. Some sort like normally we see that the company bought from this kind of supplier A, and coincidentally currently they bought from supplier XYZ. Why? We have to see why suddenly they choose this supplier, not for the existing supplier. Alright, the completeness is actually the purchase order are pre-numbered. So if they're pre-numbered, we can know all the transaction is included. But if the company is not using the pre-numbered, or there is no numbering system, it's quite difficult for the for us to see whether it's complete or there is missing or what. Alright, so account for sequence of the purchase order to make sure that everything's are in sequence. Alright, trace a file of receiving report to the acquisition journal. Alright, and then we have to trace for the invoices, and then this is for the accuracy, whether everything is accurate. So we have to check internally verify. Alright, batch, and then we have to batch total and compare with the summary batch. Is that report, is that the same figure or not the same figure? So this is the common test of control. Right, so we have to examine the indication of the internal verification. So what we have to do for the substantive test of testing, so we have to compare recorded transaction and then to see whether the acquisition with the vendor's invoice, receiving report and other supporting documents. So we have to compare. Alright, this one I think that you study by your own for the classification, timing, and then for the posting and summarization. Alright, so this is for the substantive audit procedures. Alright, so obtain what you have to do. For example, obtain a trial balance. So after we get the trial balance, so we see the arithmetical accuracy for the subsidiary ledger, and make sure that from the subsidiary ledger is agreed with the trial balances. Trial balance that they give to us. Alright, and then we have to segregate the amount due to others from and then segregate trade creditors. So it means that here we have to see the amount we have amount due to other from segregate trade creditors. So we have to segregate between the two. Alright, so scan trial balances for the material debit balances. So it means that we can, if you can see that for a company, so which is the material amount, so we test on that one. Right, number 2, select transaction in a simple individual account payable. So we vouch back to the purchase orders, receiving report and invoices. So we see all these kind document. The rest I think that you read by your own. Alright, balance rated audit objective and test of detail of balances and account receivables. So alright, so this is the balance audit objective, balance rated audit objective. Same also, existence, completeness, accuracy. Okay, so this is test for the balances. So what we can see here, alright, so for the account payable, for example, account payable, in the account payable should be exist. So trace the account payable list to the vendor invoices and statement. So from this here, from the list, we trace back to the invoice and the statement. So comment, ordinary receive little attention because primary concern is with understatement. Alright, so this is, we check back what are the related document. Alright, so this one you read by your own, the classification, certificate and disclosure. Alright, and this is for the accounts payable confirmation request. So it means that this is to see the confirmation request for the account payable. So here we can see that, for example, dear sir, so this is the company, dear sir, will you please send directly to our auditor, so this is the company, amount owed on the 30th June 2009. So it means that here they have to reply what are the figure that they own to the company, and then what is the overdue, and is there any collateral and so on. Alright, so they will confirmation request from the account payable. Alright, okay, now we move on to the transaction related to audit objective, common test of control and common substantive test of transaction for cash disbursement. This one for the cash disbursement. Alright, so cash disbursement, the same thing also is existence, completeness, accuracy. But the possible misstatement we can see here, cash disbursement not recorded. Okay, disbursement recorded but not made. So it means that here they record that they made cash disbursement recorded but not made. So record in a purchase but it's actually not made. So what they have to do is to see the supporting document before sign, checked by the authorized person. Make sure everything, all the document is there. So discuss with personnel and observe activities, and then what you have to do is trace the cancel check, alright, to related acquisition journal, and examine for the payee and the amount, and the rest you read by your own. Okay, alright, so this one we continue classification, timing, and posting and summarization. So this is the additional note, so procedures and acquisition of payment cycle. Alright, so analytical procedures, normally they have to compare acquisition related expenses account with the prior year. So the current year with the previous year. So misstatement of the account payable and expenses. This is going to be possible misstatement. Is there any possible misstatement? So what you have to do is review account payable for unusual transaction, non-vendor and interest-bearing payable. So classification misstatement for non-trade liabilities. Alright, so compare individual account with the previous year. Is there any recorded or non-exist account? And then we have to see the ratios also for the purchases by the account payable. Alright, so this is to see unrecorded or a non-existent account or misstatement. Alright, that's all. Thank you.